Hey traders, I lost my objectivity today and I wanted to turn my bumps and bruises into maybe a learning experience for some other people. I want to show you how I picked up on an emotional trade and how I justify getting out of one to cut down on those losses and to walk away without too much emotional damage. So first I'll walk through the time series of my experience, and then after that I'll walk you through the actual analysis that tripped me up today. So let's look at this chart. So I have this chart up with the trade on it so you can see what happened, and I shorted it right here. Now the first thing that happened as soon as I filled that order, and I'm sure a lot of you have felt this, is I was comfortable or no emotion. And that's important because trades inherently carry risk. And that means that you have cortisol and cholesterol pulsing through your blood to deal with the stress of risk. And I felt very little. And that was the first red flag that I experienced, telling me that I was potentially in a bad trade. Now, the next experience that I had, which took till about here, was duality. Duality is when your analysis, your typical analysis says one thing while your loyalties are demanding another. So this is loyalty and this is analysis. So you get a duality where that somebody might ask you what's going to happen in the market, and you will point out your clear analysis says, oh, it's up, while your loyalty, is pulling you down. And that naturally leads to the third problem or red flag that I had, which took me till about here. Secrets. Secrets is where that, and I'm going to change the color of this for dramatic effect, is where that, you're looking at your analysis and you're saying, okay, it says up, but secretly it says what you want. So you start twisting the truth to what you want, and you get secretive. The second feature of secrets, so that's twist analysis. The second feature here is you become secretive or quiet. Oops. Quiet, where that you stop talking, you don't really want to discuss. It's like, oh, this is my trade, this is my problems. You just sort of put a wall between you and other people. Maybe it's not a very big wall, but this is something that I noticed that I did. There were some questions that came in I didn't respond to, and that really tipped me off. Those questions were important to help me know. I also recognized that my analysis said one way or the other, so I said, oh my gosh, I'm doing secrets. And secrets are very dangerous. There's no room for secrets in the trading world and risk. You should be as comfortable answering questions and talking to people about what you're doing as you are not. Secrets. So that was the third thing, and the fourth thing here, I'm going to change this color, was I started asking the question. And this took me probably till about through here. I was asking this question. The question is simply this: do I trust myself? I think this is the most important aspect of getting out of a bad emotional trade, is asking this question: do I trust myself? And what does this mean? Well, my analysis said markets were going to be rising, and I knew that. I'd gone through it, but I secretly was holding on to this loyalty, and so the question really is, do I want the money? Am I chasing that this could work, or do I trust my analysis? Do I believe that when I sit down to the markets that I have any idea what's going on? Do I trust that I can see through this big confusing mess of markets and prices and analysis and ideas? And I do. I trust my analysis. So I closed the trade, not because I was going to win or lose, or because I'd hit a price tolerance or a risk tolerance. It wasn't a knee-jerk or a pain response. It was a simple answer to that question once I realized that I had enough red flags to be concerned. I trust myself more than money. And so I dumped the trade. And that means that I am not walking away today betrayed. I didn't betray myself. Or you could say, I still have my confidence. I'll be able to come back tomorrow trusting my analysis, with my confidence intact and perform like usual. Now, it's common that at step 1 here, I guess I could think back and in my mind somewhere, if this is my brain, it's a very misshapen brain. There's a brain stem right there. Somewhere in here, maybe way in the back, this little tiny dot knew in the beginning that it was a bad trade. And so technically, I guess you could hold me at fault and I could hold myself at fault. But when you're being emotional, you're sort of blinded to a lot of things for different reasons. It took me all the way until here, and it took me about this long to figure that out, convince myself to make a choice. But in the end, I think what's important isn't that I was right or wrong. It was that I walked away trusting myself more than I'm interested in money. And you'll find that trusting yourself is far more valuable than taking a gain or a loss at any given time. So that's how I picked up on it, how I responded, and got out of that trade. Now I'll show you the analysis that actually tripped me up today. Let me bring this down. Actually, let me exit that. Make this a little bit bigger. Okay, so what I was looking at was, so here was where I shorted. All right, so the thing that I saw, I think getting into an emotional trade always starts with some form of excitement. So I'll show you what kind of got me excited. I'll do this in red. So I saw that velocity was at some point going to need to come down and create some bullish liquidity or decay, either one at some point, and they would be leaning down, and maybe we'd have a timing about here that we get some liquidity. Now, here's where I thought that this would be good. If you look over here, if that market tipped down, so this is about here, so if that tipped down and they got bullish liquidity right about here, let's say it didn't go up, let's say it came over, then right when they bought, the market would move right into where bears would want to defend and potentially move that down. So over here, that would look like moving up and then straight back down. And what that means is that all the bulls who picked up that liquidity would be forced to liquidate. And I love a good liquidation. It means the market sweeps down, knocking them out. So this is what I saw, an opportunity for the bulls to get into a position immediately tricked and forced to liquidate. I got excited. Let me draw you. This is what I was very excited. I was like, I see a cool thing. So let me show you what happened once I saw that. I ignored this. And if you're following along on my Twitter feed, I even, actually, let me get rid of that. Is that the back? Here's the back button. I even posted about it. So this was bears getting liquidity. They got that decay idea. They got trapped orders right here. But you'll notice that in terms of price, they did not impact price. And if you look right here, just blatant failure with tension. So if right here tension had curled down, and so we had bears just, they were impacting the broad market, but not prices, that would have been okay. But right here, I knew there was the bears failed. And that should have changed this. What I was looking at when I saw this play is I thought, the bears are active. And I was remembering that the bears had a great play here. And I was remembering that the bulls had a little bit of trouble here. And you can see the bears impacted this morning, and the bulls slowly and then finally, did end up impacted because this was sort of messy liquidity. So I was thinking, all right, we have the bears, and I knew the market wanted to push up to that zero level. So I sort of just in my head just blanked this out. And this act of ignoring an important data point to make this cool idea work was where I think I started to get in trouble with being emotional. Because emotional is when you take something that can't be true, and you make it true. Emotions are the pieces that allow you to fill in where that you don't have enough data points or evidence. So once that happened, I began this cycle. So what I should have been seeing, just so that not to just leave you on all the stuff that I did see, was I should have said to myself, and I'll do this in, I don't know, yellow, is that the bears had failed right here, and that the bulls were going to be pushing this up to 0. And because the bears had already failed, that there was a very low expectation for them to show up to defend. I mean, we already knew they had failed, so there wasn't a lot of expectation for them to come in and defend anymore. Once bears show that they failed, especially that close to this. If we had just seen the bears this morning and then nothing here, we were just waiting to see this, then it would have been different. But because they already failed, getting that to 0 would have put very little precedent on bears selling that off. And so the bulls were able to push this up through there, not because the bears failed here, because they had already failed earlier. So that's what I should have been picking up on, but I didn't. Now, I hope this helps you maybe pick up on this earlier if you have an emotional experience in the future and stuck into a trade. One of the hardest things is getting out of an emotional trade. Usually you can pick up on them, but actually getting out of it can sometimes be a little difficult. Ask yourself if you trust your analysis. Trust is so much greater than any equity that you can potentially make from holding on to a bad trade. Also, if you're an experienced trader and you're watching this and you're like, no, that's not how it works for me, please tell me how it works. I would love to know. I think sharing is such a big deal in the trading community. We are all alone frequently at our computers. There's nobody else around to regulate us. We don't have the social experience of being able to pick up on somebody else seeing your body language and recognizing that you're stressed or in a bad trade. So we don't have that socialization that a lot of people have in the workplace. So share, tell me your experiences. I'd love to know how you deal with an emotional trade, what you pick up on, and how you get out of those positions if they cause you harm. I hope this helps. As always, good luck trading, guys.